Line break charts are up there with Renko charts as my favourite types of chart. Now the line break chart is fantastic for calling the turn, looking for reversals in price action. Notoriously hard to execute. This type of chart type will make your job a lot easier. Now in this video I'm going to dive into a pretty straightforward strategy that I've been using for a long while now, highly effective, and we're going to go through the component parts, pull it to pieces, show you how to put the trade on. Works across every market. So with that, let's get into the detail. So this is the simple line break strategy, purely technical analysis based. And in this brief intro to the strategy, I'm going to cover entry, exit, initial stop loss. What are the moving parts of the strategy? Well, it's a 5-line break chart, not what you might be used to, which is a 3-line break chart. And it's set to daily, and I'll explain why and dig into that concept more in this video. We're going to need a 9-period moving average, the awesome oscillator, and stop loss methodology 1. Now, if you've looked at the full line break course on my channel, then you'll know more about that, but I'll explain more here as well. So here we have our basic strategy setup. It's on WTI crude oil, just to show that we can work not just from FX or stock indices, that it works on all markets. And it's a 5-line break chart, and we haven't added too much to it really. At the bottom we've got our awesome oscillator. We've got a blue line there, which is the 9 moving average line, and finally we've got a Bollinger Band, which I've done some tweaking to. I've sped it up to 10 periods. I've moved the standard deviations down to 1, but I've also created an offset, and you'll find out why I've done that in a moment. So how does the strategy work? Pretty simple. Start from the bottom, the awesome oscillator. When it goes from red to green, it's a buy, and green to red, it's a sell. But at that same time it transitions over, we look up to the line chart, and we want to see the line chart bar crossing the 9 moving average at the same time in the same direction as the awesome oscillator indicator is giving us. If that is the case, then we get into the trade, and this is where the Bollinger Band comes into play. We stay in the trade until the price either goes back through the 9 moving average with the opposite colour bar to the trade direction, or the price comes back into that Bollinger Band. So that's our ultimate stop, get out of the trade whether it's worked or not position. And the initial stop loss, I said we're using methodology 1, so that means that we put our stop just below the turning points, the reversal points of the line break chart. Let's first of all then look how we set up the chart. Now in front of you you've got standard candlestick chart. It's set to daily. It's looking at the S&P 500 E-mini futures, very popular day trading contract. Represents, like we know, the S&P 500. Now we need to turn this into a line break chart, so we go up to this little button here at the top, we hit that, we scroll down till we find line break, click on that. We now have our line break chart. Now notice here also in the top got that number, that is the number of bars that the chart is set to, and remember we said we want 5, so if we double click on that and change that to 5, there we go. And why am I using 5 in this? Well, it smooths out the trend a lot better than, say, if you were using, maybe let's just set it back to 2, you know, more aggressive approach. Nothing wrong with that, but this is how this strategy works. So got 5 there at the moment. And another top tip for you in using these sorts of charts, what I like to do is I like to look at the data once I've produced the line break and see how smooth it is. And I'm looking for like these sort of what do I call them, spikes in the data, these one-off bars. I don't really like those, so I tried to smooth them out further. And sometimes, you know, I like to use the 4 setup, and as you can see, that one then becomes a 2. Yes, you're going to still have them, and we'll deal with them in a minute, but tip is, you know, you can use 5 to start with, but just play with 5 and 4 to see how smooth that chart is. So I've zoomed in on the nearby data. Now I'm using TradingView here for this example, and I'm going to address the issue of time, because line break charts shouldn't have time involved, but a chart package like this, you have to set a default time period, and that sort of breaks the rules of these types of charts, so Renko, Kagi, line break, but it also can help us out a lot. Now, if you want more signals more often, and we can lower the time frame, and I suggest having a play around, maybe have a look at 4 hours and see what that does. Look at the nice smooth patterns we've got there. So maybe the S&P is great for the 4 hour chart, or even go down to 1 hour if you want to, and there's nothing to stop you even getting into the minutes or time frames. There's a 15-minute. Like I said, this sort of package allows you in TradingView to manipulate time and create your own unique edge insight into using line break charts. Now if we just flick that back to the daily, and we're going to get the rest of the chart set up. So we also have Bollinger Bands on there, so we go up to indicators, we've typed in Bollinger Bands, I've already got them set up there. Now this isn't your standard Bollinger Bands that I'm using, so I'm using these settings. I'm using 10 for the length, 1 for the standard deviation, and 5 for the offset. And we don't need the middle band, so we just get rid of that as well. That's the basis at the period of time, so we just scroll that back out of it so you can start to see its effectiveness. We also had a moving average on there as well, so again, type in moving average if you haven't got it already in your display. We've got, there it is, added on. Remember that was 9 periods. So again, if you just want to make it stand out, we can decorate it a bit, make it a bit thicker so we can see it a bit more clearly. Let's go for a black line there. Right, and then what we want to do is add the oscillator underneath, and that was the awesome oscillator. Again, you can type it in, just type in awesome, and there it is sitting there. Add that onto there. Now it will default as this histogram. We want to change that to the line version, so we go there, go into the settings, and we hit the line. Now it's not very thick, so we can't really see it, so I just maximize out the colors. So there you go, and that basically is our setup. Remember I said this works in any market, so I've got Nvidia here for the US tech stock. Now this can work, I said, on FX, commodities, crypto, the lot. You follow the same principles, the same rules, but all you have to really do is decide on the time period, if you can adjust it in your chart package, and whether you want to use 5 or 4 bars in the initial setup. Now we're going to go through the rules here of the trade. We briefly touched on them earlier, but I'm going to cover them off now. So we've got Nvidia here. Now you notice these purple lines I've drawn on. These are where I'd be getting interested in the trade. Let's take this example just around here at the moment. See the purple line? Now that is our entry point. Now we've got the trend up. Now why is it 5 blocks? So what we do is you would count 1, 2, 3, 4, 5, and normally you would put a marker under the 5th one, which was here, that first one of that series, and that is where you would normally enter the trade. But to me that is not aggressive enough, and I like to take either a 2 block or 3 block reversal. So here is why that purple line is set here. It just gets you in a bit earlier to the trade, and we would enter here. We would let that go all the way down there, and then in this example you could maybe get out on, well, you've got 3 ways. You've got the block, if you would reversal of 2 points again, because it's a, you know, a new long trade. And this strategy you can just continuously roll your way through the price. The second way of getting out the trade is to wait until that goes back into the Bollinger Band. That's like your ultimate default stop. Or the third way, you could wait till that price reverses on and breaks through that moving average, you know, that 9-period one that we set up. Now remember, I just said that this allows you to roll all the way through you know, a price series for whatever asset you're trading. You might want to filter out for the trend, so I've just added on here a 200 moving average. So you might take signals, you know, long ones if they are above, you know, you're long if you're above, you know, the price there, and you're short if you're below it. But remember, we've got the oscillator here as well helping us in. It's not just a case of, you know, those purple lines that I drew on earlier. Let's draw another one on here. So we got 1, 2, 3. Here's our purple line, like so. We've got the change in the oscillator down here at the bottom. We've broken through, and the final piece of the jigsaw is the moving average. Now again, you can experiment and play around with the settings. You might just want to take the break of the line and the oscillator, or you might want all 3. You might just want one of them. Up to you. Back test it, check it out. You know, add on maybe a 200 moving average filter or 100 moving average filter for trend direction if you so choose. So another example is, you might ask, well, what if there's not 5 green blocks in a row, say, or 5 red blocks in a row? How do I work it out when to get in? Well, again, here we have 3 downwards here. Let me just draw around that one, get the right thing on. There we go. We've got 3 here. So what I would do in this instance is, because we're using the 2 reversal, I would put a line through there. Now this isn't a video, and I'm bullish in the video at the moment, so my trend line, if I had it on here, would probably be, you know, moving average filter, whatever filter you want. You could even put an Ichimoku cloud on here to filter it out. Would be something like that. So I'll be saying, well, it's above the price, I'm going to take this more aggressive way in. There's not a 5 trend there, but the 5 trend has created this pattern anyway, so that's why you got to think, it's created it. But we want an aggressive entry, so although the setup is 5, we want the 2 to get in. And down the bottom there, you can see that our oscillator has changed to green. Same time it's gone through the moving average and the purple line, so I'm in and running for a long trade in the video. And like I said, this is the same approach you would take for any market, or even if, you know, like I said, you wanted some quicker action and you changed it, maybe say down to a 4-hour chart, exactly the same process. Again, down to a 1-hour chart, exactly the same process. So there you go, that is a typical example. And now we're going to have a quick look at how you would place the trade, because I've got a really good top tip of using line break charts that can save you a lot of time and hassle, and maybe stop you from getting into trades just a bit too early. So here's another one of my line break top tips. Now, we can use orders for line break charts, and this has many advantages because it means we can park our decision to go over long or short and go away and do other stuff. It's helpful if we're time poor or we've got lots of trades we want to put on. This is how it works. Now, I've over exaggerated the example here. Now we're sticking with the video, and just say supposing we want to go short in the video and we're using a 3 reversal instead of a 2, slightly more conservative, and that is our possible entry point. Now what you can do is you could place your order which is around about 210 on there. Let's just mark that. So you go into your broker, you put in a sell stop order to get into the trade at 210, and then it breaks through, you get in automatically, and off it goes. And what is good about this as well is if that price never gets there, then you're never going to be in the trade. So maybe it was the wrong trade to be in, and maybe the price then goes off, reverses round to the upside. So it stops you jumping in, getting too excited into a trade too quickly. And again, as these new blocks form, you can then start moving your stop as well. So maybe it then becomes down here and you are at 205 maybe as your point. You can keep sort of trailing your entry order until the right moment arises. It's a unique feature of the line break chart is you can use orders to get your way into the trade a lot easier. And like I say, it helps fit into maybe a bit of lifestyle trading, or just if you're busy trading and trying to look at other screens at the same time. So just another top tip for you there when putting on the trade. Have a think about using orders, sort of set and forget type trades. Remember, the exit is maybe you could set up a rule on the awesome oscillator down here at the bottom. You can certainly set up alerts. If we just have a quick example here, we click on there, you hit an add alert, and you can change. You can set an alert when it changes from red to green or green to red for that, and that can ping you, and that could be maybe your exit of the trade. Or maybe just set up a whole series chains of alerts that factor in all those components that warn you, and then that might allow you to enter at market straight away. But like I said, have a think about being able to use the trailing order effect to help get you in at the best place for this type of strategy. Sometimes in trading, the simplest, easiest solutions often work out to be the best, and this line break strategy, as I told you, pretty straightforward, not too much to it, a lot common sense in there, putting indicators together to create a straightforward strategy. Give it a try and let me know what you think. Now, if you found line break charts interesting, you want to learn more, got a great free course on the channel for you to access, and a link to that is coming up right now.